Hello everyone, thank you for joining our webinar. This is Alan, Senior Audit Manager. Today, we are going to share with you all about Hong Kong tax system and case studies. During our webinar, for any questions, you may drop your message on the chat box at the right-hand side. We will answer the question in Q&A session at the end of today's webinar or share the relevant information afterward. And you can also click the live chat red button on the top to make an appointment with us for further discussion or consultation. Now we will start our first part of webinar, Hong Kong tax system. Hong Kong tax system is simple and tax rate is low compared with most of Asian countries. There are three direct taxes in Hong Kong. First is profits tax, that is corporate income tax. Second is salary tax to individual. Third is property tax chargeable on rental income from real estate. Hong Kong adopts territorial basis of taxation. That means only business profit, employment income, and property rental income arising in or derived from Hong Kong is taxable. Moreover, Hong Kong has no capital gains tax, low VAT, and GST. Currently, Hong Kong has concluded more than 30 bilateral comprehensive tax treaties. Now let's talk about profits tax. The normal tax rate is 16.5% for limited companies and 15% for unincorporated business, such as partnership. For 1st April 2018, two-tier tax rate regime was introduced. Under this regime, eligible companies can reduce half of the tax rate for the first 2 million Hong Kong dollars assessable profit. That means 8.25% for limited companies and 7.5% for unincorporated business. Moreover, capital gains, dividend to shareholder, and profit sourced outside Hong Kong are tax exempted. On the other hand, in order to protect tax revenue, provisional tax may be charged based on current year assessable profit. Tax filing. Hong Kong companies can freely choose their accounting year-end date. For companies having year-end dates between April to November, the tax filing deadline is 2nd of May of the following year. December year-end date companies have tax filing deadline on 15th August of the following year. Companies having accounting year-end date between January and March, the tax filing deadline is 15th November of the same year. The first profit tax return is issued around 18 months after the date of incorporation, and the filing due date is 3 months from the issue date of the return. In order to complete the tax filing, the company should submit tax computation report, audited financial statements, and profit tax return. Let's talk about the employer's return. Employer has reporting obligation for all its employees, irrespective whether the employees render service in or outside Hong Kong if their total annual income exceeds the reporting limit. The current reporting limit for single persons is 132,000 Hong Kong dollars. On the other hand, income regardless amount to married person, part-time staff, or director should be reported. The reporting period is from 1st April to 31st March of the following year. Employer must complete the return and lodge with Inland Revenue Department, RRD, within 1 month from the issue date of return, even if no employees was hired during the year or the business has not commenced. RRD normally issue employer's return on the first working day of April. Employer's return and all the forms of IR56B must be signed by the same responsible person. For a limited company incorporated in Hong Kong, they must be signed by the employer's director, company secretary, or manager. Let's turn to the employee tax filing. Employees should report income before deducting mandatory contributions to recognized retirement schemes, MPF, received or receivable during the year. Income include income from an office, full-time or part-time employment, or pension from a former employee. Even if full or partial tax exemption is claimed for offshore nature, the gross amount should be declared. Then employees should fill in the amount to be excluded in the return and complete the appendix to the return. Same as employer's return, the reporting period is from 1st April to 31st March of the following year. Employee must complete the return and lodge with IRD within 1 month from the issue date of the return. IRD normally issues individual tax return on the first working day of May. Employee can claim for eligible deductions such as approved charitable donations and contributions to MPF and eligible allowances such as married person's allowance and child allowance in the return. So we'll move on to our second part of today's webinar, case studies. The first topic is offshore income claim. Unlike most countries, Hong Kong adopts territorial basis of taxation. That means only business profits, employment income, and property rental income arising in or derived from Hong Kong is taxable. It applies to both resident and non-resident of Hong Kong. Although the concept of locality of the sources of income seems simple, in reality, its application often can be complex. No universal rule can apply to every scenario. Whether business is operated in Hong Kong and whether profits are derived from Hong Kong are determined by facts and depend on the nature of process and as well as of the transaction which give rise to such profits. Not all taxpayers' operations are relevant to determine the source of profits. The key is focusing on the location of profit-generating activities as distinct from incidental activities, such as accounting and auditing. A Hong Kong company may apply for offshore income claim if it meets the following prerequisites. It has no business operational office in Hong Kong and only uses administrative office as a Hong Kong registered office, and it has no staff in Hong Kong and its director and staff scheduled come to Hong Kong. Some general rules of surface income and trading profits are discussed as below. The source of surface income is the location where the services are performed which give rise to the income. The place where incidental activities were performed prior or subsequent to earning of surface income are generally not relevant to determine the source of profits. The factors that determine the source of trading profits is generally the place where the contracts for purchase and sales are effected. Some relevant points for consideration are listed below. Where the suppliers were procured, where the purchase order was initiated, processed, and placed with the supplier, where the purchase contract was negotiated, prepared, and signed, where the customers were solicited, where purchase order from customer was initiated, processed, and placed with the taxpayer, where the sales contract was negotiated, prepared, and signed, where goods were stored and the shipment was arranged. All Hong Kong companies have legal obligation to do tax reporting to Hong Kong Inland Revenue Department, even the companies are eligible for applying offshore income claim. Please note that offshore income claim is not automatically given by IRD. More often, offshore income claim is a year-by-year basis exercise. In other words, successful offshore claim in 1 year does not automatically guarantee an offshore claim in other years because the companies may change its mode of operation. Taxpayers can submit a claim for offshore income together with its audited accounts and profit tax return to IRD. After receiving the application of offshore income claim, IRD will assess the case and usually will raise queries regarding to the details of taxpayers' mode of operation and request taxpayers' transaction documents of some representative transactions in order to support the offshore income claim. Let's turn to the Certificate of Residence Status. Hong Kong has concluded more than 30 bilateral comprehensive tax treaties. In order to enjoy tax benefits under these treaties from other jurisdictions, Hong Kong company may be required to apply Hong Kong tax residence certificate, that is, certificate of residence status from Hong Kong Inland Revenue Department. For example, under tax treaty between Hong Kong and China, tax will not be charged more than 5% of the gross amount of dividends if the resident is a Hong Kong company directly owned less than 25% of the capital of the company in China. Moreover, tax will not be charged more than 7% of the gross amount of interest income. However, Inland Revenue Department takes a more strict approach to issue the certificate of residence status in order to avoid tax treaty abuse. It generally requires the company to have its management or control normally exercised in Hong Kong for granting the certificate. The following factors are generally used to determine place of management or control. First, whether directors have a place of residence in Hong Kong. Second, the place of board meetings. Third, whether the company has employees in Hong Kong and their duties. Fourth, whether the company has physical office or fixed place of business in Hong Kong. If Inland Revenue Department cannot conclude the management or control normally exercised in Hong Kong from above factors, the certificate of residence status will not be granted. The certificate is valid for 1 year and renewed on a calendar year basis, except those issued under the Hong Kong and China Double Tax Agreement, which can prove the Hong Kong tax residence status for that year and the succeeding 2 years. Today's final topic is two-tier profit tax rate regime. The standard profit tax rate in Hong Kong is 16.5% for corporations and 15% for unincorporated business. On the other hand, two-tier profit tax rates has introduced for corporation and unincorporated business with effect from the year of assessment 2018 to 19. Under the two-tier profit tax rate regime, the profit tax rate for the first 2 million Hong Kong dollars assessable profits will be lowered to 8.25% for corporation and 7.5% for unincorporated business. Assessable profits about 2 million Hong Kong dollars will continue to be subject to the rate of 16.5% for corporations and standard rate of 15% for unincorporated business. All entities with profits chargeable to profits tax in Hong Kong would qualify for the two-tier profit tax rates, except those with a connected entity which is nominated to be chargeable at the two-tier rates. For 2 or more connected entities, only one of them may elect the two-tier profit tax rates. Now let's discuss about the connected entity. An entity is a connected entity of another entity if A, one of them has control over the other, B, both of them are under the control of the same entity, or C, in the case of the first entity being a natural person carrying on a sole proprietorship business, the other entity is the same person carrying on another sole proprietorship business. Generally, an entity has control over another entity if the first mentioned entity, whether directly or indirectly through one or more than one other entity, A, owns or control more than 50% in aggregate of the issued share capital of the later entity. B, is entitled to exercise or control the exercise of more than 50% in aggregate of the voting rights in the later entity. Or C, is entitled to more than 50% in aggregate of the capital or profits of the later entity. For taxpayer with connected entities, the nominated entity may make the election by declaring in its profit tax return or individual tax return that it is chargeable at the two-tier profit tax rates for the relevant year of assessment, whereby no other connected entity elects to be so chargeable. Once the election is made, it is irrevocable for that year. However, a different connected entity may elect a two-tier profit tax rate for a different year of assessment if all conditions are met. Please be aware that heavy penalties may be imposed for making an incorrect return without a reasonable excuse. Additional assessments will be raised on the taxpayer on the basis that the two-tier tax rates do not apply. That's the end of our presentation today. We hope that the information we have shared is helpful for you to understand about Hong Kong tax system. Now it's a Q&A time, so let us review the questions from the customer first. The first question is, referred to the two-tier profit tax rate regime, what's the tax rate over 2 million Hong Kong dollar assessable profit? The tax rate is normal tax rate, that is 16.5% for limited companies and 15% for unincorporated business. The second question is, are the reporting periods between employees' return and profit tax return different? If the company's accounting year-end date is not 31st March, the reporting periods are different. The reporting period of employees' return is from 1st April to 31st March of the following year. On the other hand, reporting period of profit tax return is accounting period. What's the tax rate of dividend income received by a Hong Kong company? Dividend income, whether from Hong Kong or overseas, is not taxable. Are management accounts sufficient for the completion of tax filing? No. Completed profit tax returns should be submitted together with the audited financial statements and tax computation report. Who is responsible for completing the salary tax return? Salary tax return is issued to the individual who has the salaries income or other reportable income. Therefore, the employee, not the employer, is responsible for completing the salary tax return. Okay, there's some live questions. Okay, the first one is how to apply the offshore income claim. The offshore income claim is applied when completing the profit tax return by filling in the relevant information. The second question is, do I need to submit the supporting documents for application of offshore income claim? Okay, you only need to submit a claim together with audited accounts and profit tax return when you apply for offshore income claim. After RD review the application, RD will issue queries letters to request supporting documents if necessary. That's the end of the presentation today. We hope that the information we have shared is useful for you to understand about Hong Kong tax system. Please feel free to contact us for any inquiry. Thank you for your time. We are Premia TNC and hope to see you again on next webinar. Bye-bye.